Hello everyone, Sane here from CryptoCreate. Hope you are having a fantastic day. This video, which is the first video as part of the technical analysis series, is about how to get your daily bias. I'm going to go through this step-by-step guide explaining how I use this concept to get my daily bias. So let's get into it. Alright, so the first thing that I do is I ask this exact question. Has there any liquidity been generated? So here we can see that after making this initial low, price returned to the same area, sweeping below the first low and generating the liquidity. So the second step is to mark out our swing highs and swing lows. So going through the chart, we mark out our swing highs and swing lows. Here we can see that price has made this swing low over here, then a swing high over here, another swing low over here, swing high, swing low, swing high, swing low, and swing high. So after marking the swing highs and swing lows, we then identify the market structure and the current price range that we have. So going through the chart, we identify how the swing highs and swing lows that we marked on the chart stand relative to each other. So here we can see that we made this swing low over here, and then we made this swing high over here. Then from there, price sold off and made a higher low formation relative to the previous low that was created over here. And then in here with this swing high formation, this is also lower relative to the previous swing high marked on the chart. So this is going to be a lower high. Then price sold off from here, and we have now confirmed a lower low relative to this low and the initial low that was created over here. Then price from here rallied towards upside, making a lower high relative to the previous lower high formation. After making this lower high, price sold off but failed to make a lower low compared to this previous lower low formation and started rallying from there, making a higher high compared to previous high that was created over here. So after price make this higher high formation over here, now we have a confirmed market structure break towards upside, and from this higher low to this higher high is going to be our current price range, with the higher low being the price range low and the higher high being the price range high. So after identifying the market structure and the current price range, the next thing that we need to do is identifying the discount and premium areas with the help of the Fibonacci retracement tool. So now we have identified the discount area and the premium area, with discount area being the lower half of this whole price range and the premium area being the higher half of this price range. So the next thing that we need to do is to identify the market structure break, which we have already done that and marked on the chart. The next step is to identify and mark out our order blocks and breakers. Going through the definition of bullish order block and the bullish breaker quickly, here we can see that the bullish order block is the last down candle prior to the up move that could break market structures high, and a bullish breaker is a bearish order block that fails to act as resistance. So here we can see that this is the last up candle prior to the market structure break to the downside, which makes this candle a bearish order block, but then fails to act as resistance. And on the flip from the other side, it's going to turn into a bullish breaker. Going to our chart, we can see that this is the last down candle prior to these up moves that could break the market structure towards upside. Hence, this is going to be our bullish order block. And the last thing that we need to do is mark our imbalances, which is going to be the fair value gap, as these gaps tend to get filled and we can use them as our price targets. So going through the chart, from the low of this candle to the high of this candle is going to be the imbalance that we are looking for in a form of fair value gap. So after making a higher high formation, we anticipate for price to push lower in order to make that higher low formation, ideally within the discounted area of this whole price range. So there we can flip our bias to a bullish bias in anticipation of that higher low formation for price to push higher. So when price is hovering after making a higher high, we do not expect for price to push higher from here. Although it can extend for a bit more, we anticipate for that higher low formation within the discounted area. So till then, our bias after making a higher high is going to be short-term bearish on the lower time frame, looking for that sell-off to make that higher low formation. But after price reach to that bullish order block and the discounted area, then we are going to flip our bias to a bullish bias in anticipation of a higher high formation. So by going through these steps, now we understand that on a higher time frame, in this case the daily time frame, our bias is going to be bearish after price make this higher high formation in anticipation of a higher low formation. So with that in mind, now we just have to wait for price to reach to that bullish order block and the discounted area, then we can zoom in on lower time frame in order for us to look for long setups. or to look for short setups after price make the higher high. Although we can start looking for short in here, this is going to be a counter trend trade. That's why it's going to be a bit riskier compared to if we wait for price to reach to our area of interest around that bullish order block and the discounted area to play long setups in anticipation of a higher high formation and possibly fill out this fair value gap. So this was the first part of the technical analysis series that I'm planning to share on this channel. If you like this video, please don't forget to smash that like button, subscribe to the channel, and also turn on that notification bell so you won't miss out on any future contents. With that being said, Sen here from CryptoCreate. Thank you very much for sticking around to the end of this video. Till next time, take care and peace out.